Hello everyone, today we will start books of original entry, that is journal. Now in today's session we will be discussing the theory part of journal, and from our next session we will start solving journal entries. Now first let us see what is journal. The books in which a transaction is recorded for the first time from a source document. In our previous session we have discussed what was meant by source document. Now after taking transaction or information from source document in the book, whichever book we use to make first entry is known as books of original entry. Journal is one of the basic books of original entry in which transactions are originally recorded in a chronological, means day-to-day order, according to the principles of double entry system. Now principle of double entry system is nothing but the rule that if one account is debited, then another account will be credited. That means every transaction affects minimum two accounts. When the size of the business is a small one, then it is possible to enter each and every transaction in the journal. Means if the size of the business is small, then there will be less transaction and you can easily record all the transaction in your journal. But when the size of the business grows, it becomes no longer possible to record each and every transaction in the journal. Means you will understand properly once we start passing journal entries. Means when we will start doing journal, you will realize then why is it impossible for a big organization to maintain journal. Okay, as such, the journal is subdivided into a number of sub-journals known as special purpose subsidiary books or books of original entry. Because big businesses, they cannot maintain journal, what we did is that we divided the journal into different parts, and those parts are known as sub-journals or special purpose subsidiary books or books of original entry. Now these sub-journals are cash book, purchase book, sales book, purchase return book, sales return book, bills receivable book, bills payable book, and journal proper. Now all these books we will learn how to prepare in subsequent chapters. Now these books are termed as books of original entry because transactions are first of all recorded in these books. A businessman need not maintain all of the above mentioned subsidiary books, but he may maintain any of the above books according to the needs and requirements of his business. Now it's up to the businessman whether he wants to maintain all those books or he can skip some of the books as per his requirements or needs. In this chapter, only the journal has been discussed. Means we will see from small business point of view and we will prepare journal. Subsidiary books have been discussed in subsequent chapters. Now let us see what is a journal. It is nothing but a book of original entry in which transactions are recorded for the first time as and when they take place. Now this definition is very simple, or means they can ask it for 1 mark. According to Professor Carter, the journal is originally used is a book of prime entry, means first entry, in which transactions are copied in order of date from a memorandum or waste book, or you can say source document. The entries as they are copied are classified into debits and credits. Means in journal there will be two parts, one will be for debits and one will be for credits, so as to facilitate their being correctly posted afterwards in the ledger. Now after posting into journal, what we will do is that we will take those entries and we will post in the ledger. Now in short, or in other words, you can say that journal provides a date-wise record of all the transactions with details of the accounts debited and credited. Means journal will give you information that which account was debited and which account was credited, and the amount of each transaction, means how much amount of money was involved in those transactions. Prior to recording in journal, the transaction may also be recorded in a rough book called waste book or memorandum book, but it is not that much important because mainly we focus on journal or sub-journals. Now let us see some characteristics or features of journal. Now journal is a book in which transactions are recorded in first of all as and when they take place. For this reason it is called a book of original entry. Means you can say that journal we prepare in chronological manner. Then next is a journal is only a book of primary or original entry. All the transactions recorded in the journal are subsequently transferred to ledger, which is the principal book of accounts. Means journal is not that much important from business point of view, but ledger means after preparing journal it becomes easy for us to prepare ledger, and the reason you will understand once we start preparing ledger. Then a journal is a daily accounting record, means everyday transaction happens in the business, so making journal or entering journal entries is also a daily routine. Then in journal, transactions are recorded in a chronological order, that means in a date wise order. It maintains the identity of each transaction, means it gives what kind of transaction was that, and it provides all the information about a particular transaction. Okay. Then a journal records both debit and credit aspects of a transaction according to the double entry system of bookkeeping, means it will show both debit and credit of a transaction. Then each entry in the journal is followed by a brief explanation of the transaction, which is called narration. Now after passing every journal entry, you have to give one brief explanation or narration of the transaction. A single journal entry is capable of recording more than one transaction involving more than two accounts. Now remember when we discussed about compound voucher. Okay, now compound entry is nothing but in which more than one account will be debited or credited. Those are known as compound entry. Now what is the function, or what are the functions of journal? Its first function is to keep a chronological record of all transactions, then to analyze each transaction into debit and credit aspect by using double entry system of bookkeeping, because you can find out which account was debited and which account was credited through journal. To provide a basis for posting into ledger, means preparing ledger from journal is very easy, that is why it is sometimes known as for providing basis for ledger. Then to maintain the identity of each transaction by keeping a complete record of each transaction at one place on a permanent basis, means each and every transaction are recorded and complete record is kept in a journal. Okay. Now what are the advantages of a journal? Although it is not necessary to maintain a journal and the transactions can be recorded directly in the ledger accounts, a journal still is used for the following reasons. As transactions in journal are entered as and when they take place, the possibility of omission of a transaction, means forgetting about recording a transaction, is minimized in journal. Transactions in journal are recorded in chronological order. It is very easy to locate a particular transaction when required. Means if you remember the date of a particular transaction, then you can easily check in your journal whether the transaction took place or not, or if you had any doubt regarding transaction, then you can easily find it in your journal. The next is by analyzing each transaction into debit and credit aspects, the journal facilitates posting into ledger. It helps in preparing ledger. Then each entry in the journal carries narration, which gives a brief explanation of the transaction. Hence, postings in the ledger can be made without explanation. Just because we provide narration or explanation in journal, we don't need to provide explanation in ledger account. Then journal facilitates cross-checking of ledger in case of a trial balance does not agree. Now there is a proper sequence. Okay, first we will prepare journal, and then from journal we will prepare ledger, and after preparing ledger we will prepare trial balance. And if the trial balance does not matches, the debit and credit side does not matches, then we have to go through what mistake we had made. In that case, journal helps in cross-checking, means we can check where we had made mistake with the help of journal entries. Then since entire transaction is recorded at one place in journal, the identity of each transaction is maintained on a permanent basis. Means since we provide narration and all the information in one place, it is easy to find. Okay. Then once a transaction is recorded in journal, posting in the ledger can be made as and when convenient. Means journal we prepare every day, means as soon as the transaction take place we prepare journal. So after preparing journal, it doesn't require us to prepare ledger on the same date. Means if we have entries in the journal, then we can prepare ledger whenever we want. But there are some limitations of journal as well. When the number of transactions is large, it is not possible to record all the transactions in journal. It will become bulky and voluminous. Hence the usual practice is to have separate journals or books for different classes of transactions, such as purchase book, sales book, etc. Because when the size of the organization or business is very big, there will be lots of transaction taking place, and in that case we have to make journal entries every time. Okay, so it will be very bulky, and it will take lots of time as well as lots of energy as well. That's why we divide that journal into different books known as purchase book, sales book, cash book, etc. Then many transactions are repetitive in nature, and if all transactions are recorded in journal, it will involve debiting and crediting the same accounts time and again. It will involve repeating posting labor also. Means every now and then, if you keep paying rent, then for paying rent you have to make journal entry. Then the accounts involved in those transactions will be same, so it will be like repeating all the work again and again. So instead of just posting in journal, those repetitive transaction can be directly recorded in the ledger. Then in order to ascertain cash balance every day, cash transactions are usually recorded in a separate book called cash book. Now every day, if you want to know whether how much amount of cash you have in your hand, then in that case all the cash transaction we used to record in one book, that is known as cash book. Now this cash book can give you a rough idea about how much cash you are supposed to have with you now, but this will not give you by journal. Then journal does not provide the required information on prompt basis. Now imagine that if you have a thick notebook of all the journal entries, and if you want to find out any information quickly, then it will be time consuming to search for that particular transaction and finding that related information. Now this is the format of journal. In first column you will write date, then in second column particulars, then third ledger folio, fourth amount that is to be debited, and in credit side in fifth column the amount which will be credited. Now let us discuss in detail about each part or each section of this journal. Then date. In the first column, the date of the transaction is entered. The year and the month is written only once. Suppose today is date for now it's November 2nd. Okay, 2nd November. Then what you will do is that you will write 2020 November in at heading, and after that you can just mention the date 1 November, 2 November, 3 November, like that, until and unless that month changes. You can just keep on writing only the date. But once the date once the month changes, like when December comes, then what you have to do is that you have to write 2020 December. Okay, the sequence of the dates and months should be strictly maintained. Remember that while doing journal entries in your exams, because format also carries mark. Then next is particulars. In second column, each transaction affects at least two accounts, out of which one account will be debited and another account will be credited. The name of the account to be debited is written first. Means first we will write the account which will be debited. Okay, in here we will write the amount which will be debited, and after leaving some space we will write in here as DR, indicating debit. In the second line, the name of the account to be credited is written. The credit account starts with the word to. Means here we will write TO2. We will leave some space in front, and we will write in here to cash account or whatever account that is to be credited. And we don't need to write credited in here. Okay, remember that only the account which will be debited, in after leaving some space we will write debit. Okay, a practice is now developing to omit the writing of the words debit and 2 from journal entries, but still we have to follow this rule. We have to write 2 and debit. Okay, now after writing both the accounts, what we have to do is that we have to give one narration. A brief explanation of the transaction together with necessary details is given. This explanation is nothing but called as narration. The narration helps to know in future the reason for the entry and also as to why a particular account posting has been made from the journal. Particular account was debited or credited, means you have to give complete information regarding that transaction. Then third column is ledger folio or LF. All entries from the journal are later posted into the ledger accounts. The page number or folio number of the ledger account where the posting has been made from the journal is recorded in LF column of the journal. Suppose this is, you made one journal entry in here, and this journal entry was recorded on page number 39 of ledger folio, then you will write that 39 in this column, indicating that this transaction was recorded on page number 39 of ledger book. Okay, now there are advantages of writing that number in journal. Let us see. The LF column in journal shows whether an entry has been posted or not, means we saw that journal we have to prepare every day, but it is not required for us to prepare ledger also every day. We can just sit down on one day and do all the ledger postings from journal. So if you had made ledger entries, then it is compulsory for you to write ledger folio number in the journal. So if you see ledger folio in front of any transaction, journal transaction, then you will remember that, oh, you have entered this transaction in your ledger. And but if any transaction doesn't have ledger folio number, that means that you haven't made entry into the ledger book regarding the journal entry. Page number written in LF column in the journal is indicative of the page number of the ledger where such posting has been made. It helps in understanding and checking the ledger posting at a glance in future. If the trial balance does not agree, the posting of each and every entry has to be checked. Such checking will not be possible without the help of LF column. That means writing ledger folio helps you in detecting or finding out the error within a short period of time. Means you don't have to go through all the journal entries or all the ledger entries. You can just, if you have particular page number, then you can go directly to that page number and you can check. Then fourth column is amount debit. In the fourth column, the amount of the account being debited is written. Means suppose the account which was debited, the amount was 50,000, then you will write 50,000 in this debit column, and in last column, that is credit column, credit amount column, the account which was credited and amount related to this account will be recorded in credit column. Not in the same line, but in it will be little bit down, okay, little bit lower than the debit amount, opposite of this credited account. Okay, now this was the pro forma of journal, and you have to be very careful while preparing journal, okay, without narration or without proper amount or not with straight format, you will not be able to get full marks in journal. In our next session, we will start preparing journal. We will see some steps, what are the steps in journalizing and rules of journalizing. It's very easy. We have discussed traditional classification, traditional approach of account. So while preparing T-shape account, we adopted modern approach, but while passing journal entries, we have to go according to the traditional approach. So if you haven't watched that video yet, so make sure that you watch the video before starting journal chapter. Okay, so for this session we'll wind up here. Thank you.